Good afternoon and very warm welcome to all our panelists and our distinguished guests. Thank you for taking time off today from your busy schedule for this inaugural conclave on banking, financial services, and insurance organized by the Bombay Chamber. With the high caliber panel over the next 2 days, I am sure this will be one of the most talked about events of the year. I would like to thank our partners, Tata Investment Corporation Limited, Kotak Mutual Fund, Cosmic Mandala 15, and NICHEM for sponsoring this event. May I invite our President, Bombay Chamber, and founder of Avaana Capital and former chairperson of Dena Bank, Ms. Anjali Bansal, for the welcome address and her thoughts. Thank you.
Hi, very good afternoon to you. Welcome to the Banking and Finance Conclave of Bombay Chamber of Commerce and Industries. Some time back, an article was written by Kishore Mahbubani, who is a diplomat from Singapore. And generally, he has been bullish China for decades. And he gave a lecture at President KR Memorial Lecture where he made a statement that India can be bigger than China. He gave a very small comparison that Indians in America earn per capita income of about $55,000. If Indians in India were earning similar income, Indian GDP should be about $71 trillion. And against that, we are roughly around $3 trillion. Kishore felt that India is one country where the performance and potential are having the vast difference. He gave an example in a metamorphical basis that Indians are like caged tigers. The only thing restricting them is Indian ecosystem. When they go out in America, Europe, Middle East, Southeast Asia, or any other part of the world, they are able to thrive and grow and survive in that ecosystem. But in India, they are caged, they are controlled, they are restricted by our ecosystem. In Professor Kishore's view, Indians are tigers roaming in the jungle and outside India. In India, they are caged tigers, and which is why there is such a vast difference between the performance and the potential. In my opinion, obviously, what Kishore has mentioned is absolutely correct, but there is one big problem which he has overlooked. The problem is misallocation of savings by Indians. In last 20 years, we have imported about $373 billion of gold. This is net of jewelry exports. This does not include gold smuggling. This does not include gold jewelry which comes in with travelers returning from abroad and walking through Green Channel. If we add gold smuggling and gold returning through travelers, probably Indians have spent about $500 billion in import of gold in just last 20 odd years. This savings is resulting into misallocation as our money goes abroad for buying of gold. The imported gold does not create much value in Indian ecosystem. It deprives our entrepreneurs from equity, from debt, and from financing. This $500 billion of savings allocated into financial product would have created materially larger and bigger and stronger economy. Why are people trusting gold when they know that this is not necessarily the most productive investment? Many women go and do monthly investment with roadside jewelers. And when Goodwin jewelers become bankrupt, they all lose money. Many investors buy gold in 1 gram, 5 gram, 10 gram denomination without realizing that they are paying 20 and 30 and 40% premium for buying gold in a smaller lot. We are the largest owner of gold in the world, and our prices might be supporting the gold prices. Clearly, if our savings would not have gone to gold, but gone to financial products like bank deposits, insurance policies, mutual fund units, we would have funded our entrepreneurs, we would have retained equity ownership in our hands, and we would have created bigger economy. The same challenge is witnessed in collective investment schemes. Every day we hear that one or another collective investment schemes have gone down, robbing investors of millions of rupees. In last 20 years, about 100,000 crore worth of collective investment schemes have gone down, right from PSCL to Sarada to other CIS schemes. This allocation also is misallocation. This savings does not create productive assets in the economy, and many of them might be siphoned off abroad. Clearly, there is a need to retain India's savings in Indian financial product. And one of the reasons why that is not happening is that buying of collective investment schemes, buying of gold, is far more efficient and far more user-friendly than buying of financial products. Over the years, regulators have made ease of doing investments. They have introduced KYC norms. They have pushed digital applications. And yet, buying of gold, buying of collective investment schemes, and now even buying of crypto is becoming more simpler, more efficient than buying of financial products. In today's conclave, we have focused upon how to create frictionless servicing to customers, how to expand financial markets so that we can retain India's savings in India and help create $5 trillion economy. I'm sure all of you are going to enjoy rich discussion with carefully created panels, and you'll have a fruitful evening. Thank you.
Good afternoon, everyone. Sorry, we are having some technical difficulties, but thank you all for joining us today. Distinguished panelists, moderators, past presidents, members of the Bombay Chamber Board, distinguished guests, attendees, and everyone who's involved in this very important conclave. As Nilesh mentioned, it is such an important topic for the current times. I would like to extend a warm welcome to each one of you at the first day of the BFSI Banking, Financial Services and Insurance Conclave of the Bombay Chamber of Commerce and Industry, which, as many of you would know, is among the oldest operating chambers of commerce in India. At the outset, I want to thank our speakers for kindly accepting our invitation and gracing this event for addressing our members on an important topic. I think the financial services industry is going through a very significant period of innovation, disruption, and change. It is very much the heart, blood, and the lubricant that keeps our economy moving. So today and tomorrow, we are going to hear from many speakers, all of whom experts in their fields. They are leaders, stalwarts, entrepreneurs with many years of experience, and some of them absolute disruptors to the old way of doing things. And I hope we are all able to come out of this with some insight and a view as to what today's present and tomorrow's future looks like. My special thanks to Nilesh Shah, my colleague on the board. He's Senior Vice President of Bombay Chamber of Commerce and Chair of the Banking, Finance and Capital Markets Committee. Ashit Kampani, Chair, Private Equity and Venture Capital Committee. Sandeep Khosla, Director General of Bombay Chamber of Commerce, and the entire Secretariat and committee workers for their relentless efforts, and to all of you who have joined today to make this event a big success. I could go into sharing a little bit more about the chamber. Very briefly, I will do so, and then we will move into the first panel discussion of the day. As I mentioned, that the chamber, established in 1836, is a 185-year-old body, has a long, illustrious history of continuous support to trade and industry. We represent a wide spectrum of highly reputed, professionally run companies which are based in the city of Mumbai, which, as we all know, is the commercial capital of India, but whose manufacturing, service footprints extend across the country. The chamber acts as a bridge between civil society, government, and its member organizations, and aims to promote the interests of all the stakeholders in the overall interest of the country. We have hosted, as part of our AGM and foundation days, in many illustrious national leaders of government, as well as from industry. We had our 185th AGM just yesterday, and the 4 pillars that the chamber has laid out, again, going into the future, and you will hear this from us repeatedly as we go through the conclave today and tomorrow, is there is the past, there is the present, and the future, and we are all looking towards the future. Chamber is very focused on looking at 4 issues. One is, how do we create sustainable models of growth that are not only creating economic progress, but also in a way that is sustainable from the environment and social inclusiveness point of view. Second is the digital frontiers. Third is inclusive and diverse set of thought processes, and both in boardrooms as well as businesses. And finally, and very importantly, is supporting the ease of doing business agenda of the government. On that note, I will turn to the panel. Our first panel today, which I have the honor of moderating, is on frictionless service and delightful experience to customers. We are all customers of financial services. And I have the unique pleasure of inviting here the fellow panel members. Nilesh Shah, as I mentioned earlier, Senior Vice President, Chair, Banking Finance Capital Markets Committee, as well as Group President and Managing Director for Kotak Mahindra Asset Management Company Limited. Nilesh, welcome.
Thank you.
Next, Vikram Khaitan from Bank of America Merrill Securities India Limited. I will not go into long bio introductions. All of these are absolutely well-known stalwarts. So we will not, I don't think they need introduction really. Rajiv Sabharwal, Managing Director of Tata Capital. Rajiv Anand, who is member Banking, Finance and Capital Markets Committee of the Bombay Chamber and Executive Director of Axis Bank. Can we please bring our panelists on stage?
Can you hear me? Sorry.
Yes, Rajiv, we can hear you.
Yeah. Hi, Nilesh. Hi, Anjali.
Hi.
Hello, Rajiv, welcome.
Hi.
Hi, Vikram.
Hi.
Okay, we will give Rajiv Anand a minute. But let me start with some broad context setting. Given that we have the opportunity to hear from all of you and you represent very large institutions, you've had many, many years of seeing financial services in India and globally actually grow as an industry. Let me start with a very broad brush question, and I will request each of you to share your observations for 3-4 minutes, as long as you need. What are the biggest trends that you are currently seeing in the BFSI sector? What are the associated opportunities and threats that these trends mean for each of your businesses? Vikram, if I may start with you, please.
Sure. So the way I see this, I think the biggest trend I see is banks and NBFCs, I think, are differentiating themselves via partnership with fintech. I think pre-COVID, there was always a question if they would coexist or there'll be a tug of war because, and it is it's partly true also that banks always focused on product and not on experience. It's only in the last, rather post-COVID, that they have realized that customers today want more of experience like an Amazon, Zomato, or a Swiggy experience when it comes to financial services. So I think that's the broad theme that I see. However, I would also say that COVID appears to have pushed banks and NBFCs to coexist because each of them actually feed into their each other's strength. I think some of the key areas where I think I see banks and NBFCs collaborating is lending, payments, neo banking, and customer experience. And I'll allude a little bit more on the customer experience. But basically, if I just have to look at lending, I think banks always wanted to have a wider net, but I think the partnership with fintechs is helping them to source small ticket loans and just to build up new products like buy now pay later, which actually in India probably was or is at a very nascent stage. But if you look at globally, including US, Australia, buy now pay later is a very big market. And not just that, another trend that we are seeing in India is when it comes to lending, banks are partnering with fintechs when it comes to gold loans too. Moving, if I have to look on the payment side, I would say banks are perpetually trying to catch up because the way the fintechs have mushroomed in India and the way they are giving the experience to the customers, banks want to partner with as many fintechs as possible because that's the way they'll be able to grab more customers. I think three key areas where partnership exists maybe would be UPI, e-commerce, and cross-border remittances. But finally, coming to the most important point, I would say, is the customer experience. And as I was alluding earlier, I think it's now high time that banks are realizing that with this new generation, new age tech, uh, every customer wants to have an experience like they have when they are shopping on Amazon or when they are ordering food on Swiggy or Zomato, and that's the kind of experience that the customers want. Now, there can be always a debate whether who owns the customer, whether it's a bank or a fintech who owns it. But at the end of the day, this is something that has to change, and banks have to realize that they need to give a frictionless experience to customers over the next 2 to 3 years, and that's going to be the most changing trend that I see.
Thank you, Vikram. I'll pick up on some of these points as we move along in the discussion. Rajiv, if I may turn to you.
Sure.
I think biggest focus for everyone has been to present a much better digital front end and digitize everything at the back end. I think that's the biggest change which we are seeing. I remember this channel, the digital channel was largely focused on servicing customers till about a couple of years back, and that's changed. For example, we are seeing in certain products, digital channel is actually contributing close to about 20% of our incremental business. This has never happened before, and I'm not talking about just own customers. I'm talking about including customers. So it's becoming a much larger channel. So everybody is focusing on that. The other thing which we are seeing, and very similar to what Vikram said, in terms of partnerships are growing. I think everybody is looking at what can provide a better customer experience, or what can help you make a better decision as far as credit is concerned, or how can you cross-sell more. I think various partnerships have emerged, and these partnerships don't seem to be only for acquiring business, but we are seeing this emerging for collections, for example, for servicing customers and so on. So, the system is integrating far more than it was integrating before. The third is, I think, no situation is a normal situation. Disruption is happening every day. And you are seeing new players emerge where they're trying to completely disrupt the existing model. So, yeah, everybody has to be far more agile. And I don't know whether this will lead to a situation where most of the technology will get in-housed or most of it will get outsourced. I don't know at the moment, because there are pluses and minuses. While everybody has moved to cloud, that's a separate thing. But in terms of development, I believe companies may start focusing on having much larger teams inside the organization, and this is happening not only because of changes, but also because of scarcity of talent, which has suddenly become very, very critical, and more so, post pandemic striking the industry. These are some of the things I would say, and maybe we'll discuss more of these as we hear from others and more to our mind.
Absolutely, Rajiv. This disruption, innovation, two sides of the same coin. And similarly, what is a threat today can is actually be turned into an opportunity. So we will come back to a lot of these themes that we have picked up already. Nilesh, if I may turn to you.
So there is actually just one thing happening in financial market. The free lunches are disappearing and returns are coming only to the guys who are willing to take the risk. The bankers are realizing that 9 to 4 banking with golf is gone, because AAA rated clients are borrowing at a rate cheaper than bank, and peer-to-peer lending is going to impact retail loans. The brokerage guys are realizing that digital broking is available at virtually free of cost, and it is your servicing which is going to give you the clientele. In wealth management, distribution is shifting to advisory. You get return proportionate to the value add to the customer. In mutual fund, there is a differentiation between alpha generating funds versus non-alpha generating funds, and expense ratios are coming down in order to become competitive. Passive versus active debate is lingering on. Essentially, in any part of financial services now, there are very few islands left where there is free lunch available. Everywhere else, disruption or innovation has ensured that you have to take risk to generate return. You have to add value to collect fees from the clientele.
Thank you, Nilesh.
And,
As always, you have left us with a very sharp observation. Free lunches are disappearing, which can only mean good things for the customer, I would think, right? gentlemen?
Yeah, one more point I just add to what I am seeing is because of the let me say how customers have adopted digital channels. What we are seeing is that the pace at which a new product scales up is much faster today than it would have happened before. Like look at you know buy now pay later. I'm just saying, could you have imagined a new product becoming of this size so soon and so quickly? Uh, you know, and there are other examples of this also. So the pace at which they are growing in size has dramatically, the pace has increased. And for certain products, I don't know whether it's right or wrong, because we know at least in the banking industry that the true value of that portfolio, you come to know only 1 year or 2 years down the line. So some of these things, the jury is out how they will perform. Some of them will survive and grow, and some of them may die off. But the pace at which you can scale up today is far, far better than what you could have done.
So, in some ways, it's the true test of lending is when the money comes back. Giving money away is the easier part. So, we'll come back to fintechs versus NBFCs and lenders a little bit later in the discussion. I want to pick up on something Vikram mentioned. The customer wants an Amazon-like experience even for financial services, which means customer expectation is high. Customer is digitally facile, knows what good looks like, and is not afraid and quite willing, really, to switch providers. So that whole old notion of loyalty and the relationship, that seems to be a little bit under threat. So twofold question here for all of you, and let's keep it interactive. Please feel free to sort of comment and take the discussion in whichever direction. How are you, as large companies, coping with this sudden dramatic new trend towards digitalization? As Rajiv mentioned, it seems to be accelerating. The pace of acceleration is also positive. So it's an increasing level. So the pace is also increasing all the time. So change is happening much faster. How are your businesses adapting to adopt this digitalization wave? One. And are you seeing yourselves as a disruptor, enabler, or a reluctant sort of follower? And not you as leaders, but you, your businesses, your teams, your organization. And finally, as you kind of find yourselves on this train or sprinting towards this new sort of digital frontier, how do you capture this new demanding digital customer without alienating the core part of the customer franchise, who may still want a personal connection and who may not quite be so far down on their digital journey?
So if I can take a shot at it,
Yes.
I'm sure all of you have seen a movie called Mask of Zorro, Antonio Banderas. In one iconic scene, he's riding on both the horses together. So we are, in some sense, Zorro, which is trying to keep one leg on digital and one leg on physical. I cater to clientele who are 80 years old to probably 20 years old. There is a segment, and not necessarily 80-year-old is digitally unsavvy and 20-year-old is digitally savvy. The digital savviness has nothing to do with age. So I have to cater customers who want physical touch. I have to cater customers who want digital touch. And I have to balance between both. Uh, there was a WhatsApp forward which said that who is the best CTO for your company? Is it your CTO or is it COVID-19? So COVID-19 actually accelerated our digitization journey. From being physical and digital, overnight we became pure digital. It created its own sets of pressure, but finally we have been able to create the right balance between physical and digital journey. I'm sure the world will move towards digital in the days to come, and we'll have to keep on reinventing ways of managing digital ecosystem. But at the same time, we'll have to still maintain for some time balance between physical and digital. We also now have Rajiv Anand. Welcome, Rajiv.
Rajiv, you're on mute.
Rajiv, you're on mute.
I mean, this is another new phrase that we've all become very familiar with over the last 15 months. Not yet, Rajiv. Okay, we give Rajiv until we sort out the technology at the back end.
Can you hear me now?
Yes,
Yeah.
we can hear you now. Thank you.
Okay, great. Nilesh, I was just saying that we're talking about physical and digital, and here I've been struggling with technology for the last 15 minutes. Therefore, just shows you, yes, technology is an enabler, but without some help from friends on WhatsApp physically, I wouldn't have been on stage at this point in time. So, my apologies for being late on stage, but it's an interesting segue to the conversation, isn't it?
Indeed. So we are discussing the following two things. What are the biggest trends that you see currently in the BFSI sector? And what are the associated opportunities and threats? And we went around the table, and I think what came out clearly was the customer is demanding, customer is digital, wants an Amazon-like experience. It was pointed out that there are no more free lunches. You have to work much harder to get business, to capture margins, and to continue to differentiate. Speed and scale. So speed of scale up is much faster. So you have a lot less time to react. So some of these things were said, and then we went into talking about how are you as a business and as a business leader. So less as a business leader, but how are your businesses, organizations, people really coping with this need to adopt the digitalization wave and carry both segments of your customer base. The new customers who are perhaps more digitally savvy, the point was made that they're not necessarily, it's not that older people are less savvy and younger people are more, but just the more digitally facile with the less digitally facile. So getting the new without losing the old customers. So that's where we are. So if you can comment on some of this, and then we'll just integrate the conversation and move forward.
Thank you, Anjali. We as well, and people used to take to do bank called update.
The voice is still a challenge, Rajiv. I can't hear clearly.
Same here.
Same
Can you
here.
hear me
Might be
now?
yes, we
Yeah,
can.
it's better.
Okay, so maybe I should just stop. So I was saying my father used to be a banker, and in the old days, people used to take 1 day's leave to do what was called bank work, update your passbook, get a new checkbook, etc. To we're in a world where you're able to seamlessly pay on Swiggy or make P2P payments on a Sunday evening, for pretty much any amount. So therefore, we are in an environment where the customer, like you rightly said, wants to do everything here and now, anytime, any place, at a place of his choice, at a time of his choice, and I think really it's a question of survival. If you as a financial institution are not able to provide those services, I think you're pretty much doomed. So I think it's fair to say that over the last 5-7 years, technology has evolved significantly. Bankers have learned new things around UI UX, not something that comes very naturally to bankers, but bankers have learned how to design their apps in a human centric design to make it much simpler, intuitive, learning from customers. And I think and I must admit that banks in general have done a pretty good job, particularly on the retail side. I mean, our own mobile app today has in excess of 250, services which is available, and there is really no reason for you to go to the bank anymore, to the branch anymore to do most things, unless of course you're taking a home loan, in which case we still need physical documents, etc., etc. But in context, I think it still is important to have a physical presence, because ultimately we are in the business of trust. and I think the customer certainly wants to see, may not necessarily be in the metros, but as you go deeper into the country, wants to see that physical presence, wants to have that comfort that if something goes wrong, there is an Axis Bank branch which is very close to me, and I can always go there and solve my issues, which could perhaps have come through on the digital side. So uh, I don't. I have been reading about the death of branch banking now for over a decade. I really don't think that we are anywhere close to that anytime soon. Yes, maybe we need less branches, smaller branches, less number of people, but I would certainly not write the obituary of branch banking too soon.
That's a very interesting point. So you have to carry with you the infrastructure, the physical infrastructure of bank branches, locations, the costs, and yet at the same time invest pretty heavily today in technology. And at a time when the war for talent, for good technology talent, has never been fiercer. I think today large enterprises, whether it is in BFSI or otherwise, are competing not with each other for the best tech talent, but actually with the startups. And we spoke about this a little bit earlier. Rajiv, you mentioned that will technology come in-house if it is core? I've heard somebody say that banking actually is finance layered onto technology. So at the core of it is actually technology. So does technology then come in-house, and can banks or banks, all BFSI banks, NBFCs, insurance companies, mutual funds, and so on, can you really invest in that kind of technology and talent and compete with the startups? Or is there a different model where there is a partnership and there is a buy versus a build? So how do you think about it for your own business models?
So the narrative a few years ago was, that fintechs would have banks for lunch or breakfast, as the case may be. But I think, over a period of time, the narrative has evolved into a more collaborative model. The fintechs obviously have the technology, but the banks have the customer base. And really, how do we marry the two such that it's a win-win situation on both sides? And really, that's what has evolved over the last few years. I mean, we, for example, we work with a whole bunch of startups. At one end, we provide the pipes to Amazon Pay and Google Pay and WhatsApp, etc. But on the other side, we have a whole bunch of startups or technology players that we are partnering with to be able to bring that technology to solve customer problems. So I think it's a more collaborative approach that has evolved over a period of time, and I think that's healthy on both sides.
And just to add to that, maybe I was just going through yesterday. I mean, going through the list of the top 5 banks in India and their fintech partnership, and I was actually surprised to see almost all the 7 to 8 large banks, the largest banks in India, they have over 20 fintech partnerships, right from some HDFC putting in money into small case, or HDFC getting Zeta onto their platform, or SBI going for cash free. I mean, it's like every aspect of fintech, banks in India, I've seen the banks have some form of tie-up with the fintech. And I was actually surprised. I thought there'll be 2 or 3 partnerships, but all the banks had over 20 partnerships, including some large investments.
So I think it's so important for us. We actually, I mean, and I'm sure it's the same in like rightly said, in many of the other large banks as well, that we actually have partnership teams which are only focused on partnerships, and therefore you are looking at the entire startup community to be able to do hackathons, be able to pick some of the best and brightest here to be able to solve for solutions, and it comes both ways. I mean, we have a
Right.
problem, a solution, or there is a solution, and we are seeing how best we can to help our customers.
Rajiv?
Yeah.
Sabra?
So there are both sides of the coin, and some points, at some point you Anjali referred to losing tech people to fintechs. We're also losing business people to fintechs because the way their ESOPs are listing, and the way they can be awarded, we are losing even business people too. So some of those challenges are unique. But some of the other points, like what Rajiv mentioned, banks will have customers and fintechs will have technology. I feel there are enough fintechs who have now more customers than some of the banks. So to assume that fintechs will only have technology and not customers is I wonder whether that will be true. These are all questions I'm saying because I'm feeling that is changing. And this whole concept of neobank also, which is emerging, where you will have probably all services except for a banking license, uh, you know, could really disrupt some of the existing things. Today, we talk about one fintech collaborating with a bank, but if there are two fintechs, one which has customers and one which has technology, why won't they collaborate with each other? So some of these things will also happen. I don't think so. There will be an option for banks also to be like fintech. While they can collaborate, but I don't think so. There will be an option uh, on creating something on the front end or at the back end, which is as good on technology as the others can generate. I don't think so. See, one of the reasons why we have not seen a plain open space is because it's a regulated industry. If who knows tomorrow if there are 5 fintechs which are given banking licenses and how that will transform the industry. So these are some things which can change, and in a regulated industry with a change in regulation, some of these things can change very quickly. So we need to. I don't think so today, and I to that extent I agree with what Nilesh mentioned. There are no free lunches. Uh, while partnerships will be key and they will be important, but to think that these all partnerships will last and we will always have a win-win thing in it may not always be true. Everybody will have to worry about their customers. Like for example, even there could be other things which will disrupt this. What we are talking about, that payment companies can't keep the customer information. Now, that could disrupt some of the existing models. So it just looks like nothing is static and everything is moving. And to say that I will move with someone else may not be sufficient. You will have to move at your own pace besides moving with someone else. So that's how I see it.
So we have partnerships, we have but you must build your own, and clearly continuously no free lunches. So you have to keep running hard, running fast, focus on the customer and what the customer wants. I want to come back to this question, this point that was made of the disruptor getting disrupted, and regulation is actually a very interesting disruptor also in this space, because with a stroke of the pen, the regulator can either permit something or deny something that was already a business practice. We have already seen with the introduction of UPI, some of the, and now it seems funny to say this, but the legacy fintech or payment businesses, the legacy models of the wallet and so on, which was at one point the innovator, actually got quite severely disrupted. Right, the revenue and profit models, the bottom just dropped out of it because now everyone can interact and transact on UPI. So the P2P has become so much easier. Similarly, as more public digital infrastructure comes online, we can see that the so-called moats that have been created around businesses might actually very quickly get bridged. So here is a question for all of you.
And P2P, Anjali.
And P2P. P2P today, you can already do P2P payment transaction. Less easy perhaps to do full-fledged lending with other infrastructure.
Will also change. That will also get disrupted and that will change.
Yeah. But we need more infrastructure for that, and perhaps more regulatory guardrails to protect the lender, if not the borrower. It seems today, and one hears this from various quarters, that fintechs are operating with more capital and less regulatory burden than the large banks, NBFCs, AMCs. So the responsible players who are well regulated carry both a burden of higher cost of capital and more regulatory overhead, if you will. So is it a level playing field? While we all know innovation needs flexibility, and I'm a big believer and investor in innovation. So of course, innovation needs flexibility and perhaps the sandboxes. Does it actually end up disadvantaging the traditional players? What do you make of it? And where do you see this actually going? Do you see fintechs getting regulated or everybody getting less regulated? Rajiv Sabharwal mentioned fintechs getting bank licenses, but while you can take deposits and reduce your cost of funds, but it also comes with its own set of, RBI oversight. So where is this going in terms of more capital, less regulation for fintechs, higher cost of capital in some ways, and more regulation for the traditional players? Nilesh?
So this is like Anjali Joffrey boycott complaining about Sanat Jayasuriya style of playing. Well, you are suitable for test match and not suitable for one day. Please leave the field. I don't think so. Banks or NBFCs or mutual funds or insurance companies have lesser capital. Probably they have lesser risk appetite. And this is a fight where, the David and Goliath, there is a level playing field. Goliath no longer enjoys the advantage because of its higher capital base. David, because of his risk appetite, is able to create disruption. So instead of complaining, we'll have no option but to collaborate. As Rajiv mentioned, we'll have to, change our techniques. Like Cheteshwar Pujara is going to move from test match to T20. We don't have a choice. The world is moving from test match to one day to T20, and we'll have to play according to those rules of the game.
Good point. Only Nilesh can take us from Zorro to cricket, and I'm waiting for what's next. But Vikram, over to you.
I don't think so. Vikram can hear you.
Can Vikram hear me? Okay, Rajiv, can we turn to you while Vikram comes online?
I thought you meant Rajiv Anand.
Either Rajiv. And let me clarify, I did not mean less capital, but higher and lower cost of capital, which seems counterintuitive, but we must remember that fintechs are funded largely by VCs, who are largely funded by overseas pension funds and overseas sort of capital, non-Indian capital, where the cost of funds is a little bit lower right now. So, Rajiv, Anand, or Sabharwal, either one, please.
No, I'd like to let Sabharwal go first, given the fact that he is carrying the cash for the fintechs, especially after having done wonderful work on technology in ICICI. I would.
So, see, I think my personal view is the regulator will always be concerned about the stability of the ecosystem. They don't want anybody to fail, any bank to fail ever, or they won't want any of the regulated entity to fail. So stability of the financial system is extremely important. So I think what will happen is that the fintechs will get more regulated compared to where they are today. If they want to be a bigger player in the ecosystem, then they will need to get more regulated. For example, that NPCI has also said nobody should have more than 30% market share. So some of these things will come in. I think capital requirement for some of the fintechs may also become important. Who knows? They may need to share certain portion of the risk, like we have in the co-lending model. So I think the fintechs may get more regulated as they become bigger and more relevant in the ecosystem. This does not mean they will not allow innovation to happen. I think I really admire RBI in the way they manage innovation and stability. Look at what happened to the P2P market. They allowed it to be there, and then when it became relevant, they brought in regulations. Look at the MFI market. They probably know just what is the right time to get the right regulations in. So to that extent, I just feel that they will allow innovation, but as some of these entities become bigger, they will get more regulated. I'm not very sure whether banks will have lesser regulations. I doubt that. Uh, because financial stability is extremely important. Though they in between they had experimented with special purpose banks like the payments banks or the small finance bank, and the thought was that we will get more of these types. But I think I'm not very sure whether that model has worked very well. It looks like most of the SFBs have also now are more like full-fledged banks, except for certain restrictions. So it is going to get more regulated for fintechs. That is what I believe. I don't know what you feel, Rajiv.
I think let's take the bank.
राजीव आपका वॉइस नहीं आ रहा योर वॉइस
As far as banks are concerned, we are going to see more, not less regulation. That whether it is from the regulator itself or from the market. If you look at Indian context, big 4 or 5 banks now have capital adequacy well in excess of 15%, because in a sense the markets have pushed the threshold for the best rated banks significantly higher, and so therefore, in a sense, the cost of doing business has increased. But if you want to demonstrate to your customers, to your investors, that you are a safe bank, then you have to maintain capital adequacy of 16-17%. So whether it's the market or whether it's the regulator, I think banks are going to continue to be more. Fintechs, yes, we've seen a great deal of work that's happened on the P2P side, but I think of any meaningful model, particularly on the lending side, which has scaled. And I think the regulation is very particular, especially of entities which are of a deposit-taking nature. So until the regulators see, uh, the question to ask is, will fintech be able to innovate in such a manner that they are able to take deposits uh, outside the ambit of regulation is moot. Uh, but regulator would have, in a sense, a softer touch as long as they're not of deposit taking nature. Yes, I mean on the lending side they would. I completely agree with Rajiv that they have side they have led flourish up to a point with regulation. MFI is a good case in point. But I think to answer your question, the banks are going to see more, not less regulations. I also agree with Rajiv that in the context of that, the regulator is actually also pushing banks to innovate. And if you go with ideas, they're actually very, very open. Is whether RBI authority or has taken for as far as fintech innovation is concerned, and I think it's very, very interesting in terms of what central banks are doing in innovation.
Mm-hmm.
Both, not either or, both will continue. To the question that you're asking on will fintech will have capital but will have less regulation, that's the point I made, that as long as it's positive, there will be regulation.
Sure. So what we are hearing is regulation is providing the right kind of guidelines, guardrails really balancing innovation and stability, financial system stability continues to be very important. I do want to point out our next session is specifically on fintech. So to the audience and people who are attending today, a lot of the questions that I have seen on the Q&A sidebar will be addressed in that panel. So please stay and participate in that discussion as well. Here, I want to just close with a round of closing thoughts from everyone. What is next, do you think? Part of me thinks that the biggest neobanks will be the banks themselves. Right? As the big banks come up the technology curve and the digital curve, they have the customers, they have the data, they will either form partnerships or create it in-house. So the biggest neobank could be SBI, for example, with YONO. So what is the immediate future look like for each one of your organizations? And very quick, sort of 30 seconds, Vikram.
I would say I agree, because at the end of the day, see, the debate boils down to the same thing: who owns the customer? Maybe we have new banking platform and other things, but at the end of the day, it's HDFC or SBI. Those are the guys who own the customers. Those are the guys basis which the customer has the trust of putting in their money or taking a loan. So I would say eventually what will happen, all these banks have to change, and that's what we have seen happening in America. I don't see any of the neo banks or any of those new fintech companies becoming like a 200 billion or 300 billion company out there. So it's more about the banks will have to change. And I think with fintech evolution as well as COVID, I think it's just fast forward for the banks to try to get do this as soon as possible.
Great. Nilesh, if I may turn to you.
I think the model will be what Star TV and Hotstar showed. Star TV remained subscription-based revenue model. Hotstar became pure digital online, and both of them are coexisting with different characteristics, different culture, yet under the one ownership. So we'll have to create SBI, YONO, Star TV, Hotstar, equivalent hybrid model.
Interesting. I'm going to come back to you, Nilesh, on that once we do one quick round. Rajiv, Anand.
So on the retail side, it's really more of the same. In the sense of, I think the the speed of adoption will continue. We will go into 5, 6, 7 cities. We will have multi-language mobile language, etc. That very said, it looks incremental, but as you look back 18, 24 months, then you suddenly see the amount of change that's actually happened. But to me, I think the big change now over the next, maybe 5 to 10 years is actually going to be on the SME and corporate banking.
Mm-hmm.
If there's one space where technology is relatively unused, and data is relatively unused, it's within the MSME and corporate banking space. And I think we're going to see huge change in terms of the way SME and corporate would happen.
So that's very interesting, because we are seeing digitization of the SME business value chain. So it makes the SME as a business more visible, discoverable, and thus potentially underwritable and lendable. And just like we have had UPI emerge, there is also the Sahamati program that is being built out to be able to lend through direct pipes into SMEs to do flow-based lending and so on and so forth. So certainly product innovation is taking place. Digital models are being built for better risk assessment, underwriting, as well as for recovery as well. So big opportunity in SME. Also a segment of the economy that has been somewhat lower on the digital spectrum. And so whatever can be done to formalize and organize and bring them into the mainstream is probably good for that too. Rajiv Sabharwal, please.
So I quite agree with Nilesh that I think both will coexist, and it will not be geographically divided or anything, that it's India and it's Bharat. I think we will have customers on both sides who will use both models. So I believe that will happen. On SME, I do agree. In fact, just to give you a sense of numbers, we do a fair amount of channel finance business, and 60% of our channel finance is now done digitally. 60% of the customers, whether it's in terms of acquisition, whether it's in terms of credit evaluation, is all done digitally. So, a lot of this change will happen. But one thing which is certain, and I'm sure all will agree, is technology and people who are helping it reach to the front end will take center stage in all entities. They will be very, very critical on how the both the models evolve, the brick and mortar as well as the digital.
Very true and interesting as well. So people who we thought were sort of middle office, which was neither front nor back, middle office becomes more important. So in large BFSI companies, the middle office itself is getting digitized.
Anjali, just one point I want to say here, because what great set of people here is one of the reasons. Also, I believe this is happening is because nobody has disrupted that space. Everybody still believes that only people with a technology background can provide us those things. Nobody has made it as simple that people like us who are on this panel can also code and can also deliver. So somebody has to disrupt this also. Maybe one of the startups will do it and will make it simple.
Rajiv, some of these things are actually underway. They may have not scaled enough to come to your attention, but
No, I
there's a
know they
company.
are but subscale. They are all subscale.
Yeah, they're all subscale, but they will. And I think the way it is developing is they're not solving for the entire system. They are picking pieces of it. So Credgenics is solving for risk underwriting, collections,
Excellence. Yeah.
and as they bring that database together, then it becomes useful for actually going into core credit. We are seeing companies emerge with channel financing, where they're able to take slivers of that and solve for it. So certainly a lot of this is going on. Somebody's put up a question, and I've been told we have a few more minutes, so I'll keep going. Thoughts on e-rupee for better end-use management? The PM just launched e-rupee on the 15th. It's directed digital currency in some ways. Nilesh, would you have a view on e-rupee and how it could be used?
I think it's a great achievement. It's a purpose voucher given to intended beneficiary, removing the leakages, removing the intermediary. So what Aadhaar started, whereby government could direct benefits to intended recipients, and we could see disappearance of ghost ration cards, we could see disappearances of ghost fertilizer shops. Same way, e-rupee will go to a next level, where we will ensure that when we are sending benefits to a person, he is actually spending it for the right purpose and not the wrong purpose. Imagine giving money to a farmer for buying fertilizer and he using it to buy liquor. E-rupee will solve that problem also. So it's a great achievement, and it goes to demonstrate that digital infrastructure which India is creating on public side, I think that's far ahead of even developed nations. And I just want to say one thing. There was one colonial reporter who stayed in India for 3 years, couldn't find anything good in India. He was posted in France, and the first tweet he made, that if I wanted to transfer money from one bank account to another bank account in India, it was instant through IMPS. The damn thing takes 3 days in France. So our public digital infrastructure is far, far superior, and e-rupee is maintaining that distance.
I could not agree more with you. And one spends a reasonable amount of time in another country, very developed Western country outside India, and the digital payment systems, the telecom systems are nowhere near our own. Let's not talk about telecom right now, but certainly the facility of instantaneous transaction and currency and digital sort of money transfer between individuals, leave alone between businesses and individuals or government and individuals. We are so far ahead. And I think one of the biggest innovations coming out of India is our UPI, India Stack, and the entire NPCI model, which itself is now getting disrupted, right, with account aggregators and the new umbrella entities. So since we do have a few more minutes, I'm going to ask for views on new umbrella entities, and will they be actually better for the customer or not necessarily, or better for the banks? Would anyone like to comment?
Yeah, let me go first. This really good years because of the RBI or intent really is to see whether by creating maybe more with the space. Not about competing against competing because the uh, private continues to be in cash. So for us, cash is the enemy, and I think anything that any innovation that helps us bring down the cash that uh,
Okay, a series of questions, and maybe we can take them together. With large corporate B2B corporate loans be the forte of banks and fintechs drive B2C, will banks become the intermediaries to collect savings and then they lend to fintechs who on lend again eventually to B2C? And there's a point that was made on, do we believe some of the top private sector banks being reverse merged with fintech? I think we are not seeing the top private sector banks necessarily. We are seeing fintech starting to apply for bank licenses, some of them getting them, and taking over some of the more stressed banks for sure. I think it's an interesting question, and I do want to put this out. Do you see your organizations acquiring large fintechs?
uh, fair to say that this is not a conversation that certainly a conversation that gets thrown around from time to time in boardrooms. But I think obviously you look at the sector, most of the large private sector banks and some of these entities that one is talking about, either the large ones are too large, the revenue bank, bank value are being valued at whatever two uh, would not make sense. Yes, would you on acquisition of relative size? Yes, sir.
Right. So acquisitions, so partnerships, acquisitions, best of breed. There's a point that was made, biggest banks would be the FANG type tech companies and not SBI YONO type in the next 10 years. What is the belief of the panel?
I wholeheartedly.
Rajiv Anand agrees. Nilesh?
So I really don't know how the future will be. If we go by 2000 experience, AOL Time Warner didn't create a successful company. It was an epic failure. So it's possible for a physical company to get converted into digital. It's possible for a digital company to fail. It's possible for physical plus digital company to create a hybrid model. I think what will succeed is the basics of business, where you are focused on governance, you are focused on return ratios, and you are focused on capital allocation.
The only difference I would say is you have to think of whether return ratios matter in today's market. All other two ratios, I agree with you completely.
Yes. So I also have that self-doubt, Rajiv.
No, it's very
So
difficult,
good.
Anjali, to predict.
So FANG type or SBI no types?
No. There, I think the FANG types are more likely. But in today's world, while it is good to make prediction for 10 years. I think we should all make predictions next 2 years and keep doing it regularly because the way disruption is happening, by the larger companies may not get disrupted quickly because they're pretty large, but for smaller companies, and it's relevant for bigger also, that you have to keep changing every 2 years. There's no other option.
Yeah, that I completely
As they
agree.
say, only the paranoid survive.
Yes.
That I completely agree, Anjali, because ultimately financial services are only users, meaning the large tech companies are creating the technology and fintechs are creating use cases around that. Two is customer expectations are changing very, very rapidly. And so therefore trying to have a 5 and 10 year view to my mind is very, very dangerous. I think you've got to play this in so I agree.
So thank you all very much. This has been a very, very interesting discussion. I think all of you have been so insightful and so candid. That really appreciate that. Key takeaways, all of this is good for the customer. Service will improve. There will be more innovation on product. There'll be less cost to the customer as well. Somewhere technology will create efficiencies to provide for lower margins and so on for businesses and for BFSI companies. Ultimately, it's partnerships, it's embracing technology, it's embracing digitization, balancing innovation and stability through prudent regulation, which we are fortunate to have a regulator who is able to do that. Business leaders have to be like Zorro, with or without the mask, ride the horses, make it work.
With the mask in today's time.
With the mask. Sure. So be Zorro with the mask, ride the two horses. War for talent, severe war for talent, both on technology as well as business. We may start seeing some convergence of fintechs coming into banking through licenses and so on. And on the other hand, larger companies, larger BFSI institutions embracing technology and sort of turning into fintechs themselves. And finally, it is don't think about the next 10 years, really act for the next 2. 80% of strategy is actually in execution of it. So focus on that. So I'll summarize and close with that. Thank you all so very much. And I'm going to turn this over to Sandeep Khosla, the DG.
Thank you. Thank you so much, Anjali. Thanks, Rajiv.
Thank you, Anjali.
Thank you, Nilesh. Thank you, Rajiv. Thank you, Rajiv.
Yeah,
Rajiv and Rajiv, indeed. And I think we've lost Vikram, but thank you.
So thank you everyone. Anjali, thanks a lot. Nilesh bhai, thank you.
Thank you.
Vikram and both the Rajivs. To all our participants, we are extremely sorry for the disruption here. There's too much of disruption which was spoken about in the panel, and there's some disruption happening here as well. This is a new technology which are adopted, and I think some of it is giving us a slight problem. But the session was very, very interesting. The session was so informative, and fintech, old technology, new technology, digital payment. Nilesh Bhai's all these anecdotes, bringing cricket and farmers and everything else was very interesting. So we move to the next panel, and this is a panel on emerging technology in enabling financial services, moderated by Hitesh Sachdev. He's head startup engagement, innovation and investments, ICICI Bank. And the panel members are again, it's a start-studied panel. Mikhail Inani, Managing Director and Sir, Apollo Finvest. Arpit Ratan, co-founder, Sigdi. Ashwin Chawla, founder, Escrow-Pay. Rajesh Wadhwa, Chief Business Officer, M2P, YAP. And with this cutting edge technology, let's see as to how these fintech companies are, uh, you know, doing work today and how we can expect and what we can expect in the future. So over to Hitesh. If Hitesh has joined us, Hitesh is facing a slight problem in joining, or I would request uh, our our head of PEVC committee, Ashit, to hold forth till the time Hitesh joins us. Hi, Arpit. Hi.
Hi, hi everyone.
Hi. Welcome,
Hi,
welcome.
hi
Thank you for
everyone.
being here. Rajesh,
Hi Sandeep. Hi
Nikhil,
Mikhail.
hi.
Hey Sandeep, hi.
Hi, hi, hi. So, has Hitesh managed to join? Or Ashit, can I request you to come on till Hitesh joins us?
Hi, good evening. Good afternoon, everyone. I think I have to step in because Hitesh Sachdev is trying to log in and he's having some issues on getting on this new Ziddle app. So I am going to try and spend some time till Hitesh comes on. If he doesn't come on, then I am going to try and moderate this session. I hope you all are prepared. I'm also expecting Rajesh Chawla to join in, Ashwin Chawla to join in, but it seems he's also finding a little challenging to come on the system. However, welcome all of you. Mikhail, Rajesh, Arpit, you all have been working in the space of digitization in one way or the other, either helping the companies to get digitized or giving them platforms to use the digital platforms which you all have made. So I'm going to make a quick introduction about all three of you. Arpit, to start with, Arpit is a co-founder at Scienzy. Scienzy has done a great work in digitizing most of the BFSI segments in from digital onboarding to various processes and APIs to make all the efforts simple for any customer who wants to onboard on any of the application of the bank, financial services, insurance, NBFCs, etc. That's a quick on Arpit. I'm coming to Mikhail. Mikhail has worked on a very beautiful platform, Apollo Finvest, which is offering a platform as an NBFC, which I had never thought and imagined that an NBFC can be available on a platform. And he has done a wonderful work by allowing most of the fintechs to use that platform and create the end-to-end journey for various processes, which most of the banks, NBFCs uses it very digitally. Uh, we have Mr. Rajesh from YAP M2P, uh, which they have been creating the backends of the bank in a fashion in which nobody has seen. They do have many good customers and who have been raving about it. They continue to keep on enhancing the capabilities of the various banks, NBFCs, and insurance companies to digitize it, make it more frictionless, and allow them to onboard, do work very smoothly. Till Ashwin joins, I will try and articulate some thoughts here. Uh, the most important part here in today's term in this new age frictionless digital economy is how a customer gets a very good experience when the processes of banks, NBFCs, and various other players into the BFSI are creating a much smoother experience than what was happening in the past. Many times we have seen that if anybody wants to open a new bank account or wants to avail a loan or wants to avail any other services like insurance or a point of sale services, which was a little challenging because to get all the services in place, it was taking a lot of time. However, most of these players on the stage today have managed to digitize those processes, bring the friction very low, and make the customer a very delightful experience. So I'm going to request Arpit to just share his thought, his journey about how he has managed or his company has managed to digitize some of the processes. While we understand that a lot of banks and NBFCs and insurance companies needs to still further digitize and make it more frictionless. But I will allow him to share, and then same with Mikhail, and then with Rajesh while Ashwin joins us. Over to you, Arpit.
Thanks, Ashit, and thank you to Bombay Chambers for inviting us to the panel and setting up such an interesting discussion. I think one thing is quite evident, and which was not earlier, was who's going to win in the finance game. While it came to cabs, it came to e-commerce, the writing was always on the wall that customer experience will dominate the entire segment. But this was not very clear actually when we started 6 years back. You had risk guys who were, saying risk is most important in finance. There were others who were saying that banking is more important. And but what has happened, I think, and I think the way world has changed in the last 6 years, and I'm very young myself, but the way world has changed is that customer experience has now become the number one factor for financial services as well, and that's a very welcome change in the way people are talking about it. Believe me, 6 years back, we did not have panels of customer experience for financial services. You had panels for risk, you had panels for data thefts, you had panels for fraud, but no one was talking about customer experience. So I think a lot of fintechs have come in. I think it started with likes of Paytm, and I think they will have to be credited for what they did. They were the first one in the space who pushed banks back in their own game, and then made everyone realize that this is not just about having 10,000 branches. This is also about the kind of experience you can give to your end customer. So I think they really change it, and from there, I think there's no looking back. Today, of course, every segment of financial services, whether it's onboarding, something we do, or even as you keep moving on, service layers, payment layers, lending layers, I think everything has become about customer experience. And I think the more technology companies like ourselves, like Mikhail's, like Rajesh, as we start entering, you will see that banks will start giving up their space to pure-bred technology companies. And this fight, which was not so clear, is very evident now. I think now it's clearly about who builds that experience. I think that whole debate is kind of ended, we are contributing to customer experience, of course, but seen a lot of good transformation in Indian fintech and looking forward. And I think we've all just reached a stage where we say this is day zero, and I think this is the start for all of us.
Thank you, Arpit. We'll move to Rajesh. Can you share your experience, please?
Sure, Ashad, and thank you for inviting us. Thanks to Bombay Chamber. One of the changes that we have seen over the last few years is the emerging demand from millennials and the world moving towards a quick service kind of a scenario across all segments, whether it's food or financial services. The emergence of players like Zomato and a few others has proven that everyone is kind of in a hurry and they want something instantly. We've seen how banking has changed. To my say father-in-law who's 70 plus, going to a bank, going to the branch, waiting there 5-10 minutes to encash his self check is an experience, and he loves to do that. But whereas for my daughter who's probably 21, she is very happy to use the app and transfer money and do whatever she has to do for the bank, and she's never visited the branch except once for opening the account. And today, as we work in the fintech world, we see that we've been able to further enhance that process where you don't really need to even go to the branch to open the account, to sign a few papers, and everything is fully electronic, digital. People are wanting to get that service now immediately at the doorstep or at their fingertips, and that's the changing phenomenon. That's the changing nature of how services are being offered, and that's the
the basis for frictionless and digital service delivery in financial services today. And banks are slowly kind of moving towards that, either by themselves or working in collaboration with fintechs, and quite a few of them with whom we currently work. And we've seen adoption across the segment. And the interesting part is, while ideally this is targeted to the millennial
Hello.
crowd, a lot of
Yeah,
the
Hitesh, we can hear you.
hi Hitesh. A lot of the young adults in the 25 to 50 age have quickly adopted the new paradigm and have moved forward with where they were to how the digital economy is working.
Oh, thank you. I think we have our moderator Hitesh on the stage now. I was just acting moderator in the meantime, and we also have Rajesh on the stage now. So I am going to go backstage, and over to you, Hitesh, to take over this moderation.
Thanks, Ashit, and my apologies for all the harakiri which you had to go through. Please bear with me. I hope I am audible and I'm visible.
Yeah, you are
Yes,
absolutely
yes,
audible.
yes.
Yes, you
Absolutely
are.
audible.
Yes.
I hope
So
this doesn't
while you
get
came,
into.
I set the stage for you for how this digitization and frictionless world is happening. So we were about to hear Mikhail. I'm happy to hear Mikhail, and then I'll go on backstage. In any case, I'll be hearing, and then over to you, Hitesh, to take over from there, because Rajesh will, Ashwin will have to give his introduction, and then you can start your Q&A.
Sure. Sure.
Thank you.
Awesome. Thanks. Thanks so much, Ashit, for giving me the stage. So I think, firstly, I think, companies like a Scienzy, M2P, obviously Escopay, all of these guys, right? Like, I think pretty much I would say, this is the infrastructure of the future, right? Like in one simple line, like over the next 10 years, what we're going to be seeing is a massive democratization of financial services, right? Whether it's lending, whether it's, mutual funds, whether it's investments, anything like that, right? And all of that democratization is going to be happening on companies like this, right? And just like AWS is today for apps, basically, right? Like all of these companies here today are basically the AWS for different kinds of financial services in the future, right? Similarly, like, I think, Rajesh mentioned about post offices, right? Like at least my thought process on bank branches is pretty clear. I think like over the next 10 years, they're going to be like exactly like post offices. None of us are going to be at least going there willingly. Right. So to me, like, that thought process is extremely clear. I think, what Rajesh mentioned about his children, being 21, never wanting to go to, bank branches anymore. I think that is pretty much, India between the age of say 20 to 40, right? If not even below 20, right? And that's the majority part of India. That's the expectation. And that's what, we all have to kind of live up to. Fundamentally for us as well, right? I think from an Apollo perspective, largely in one simple line, we think of ourselves as the AWS of digital lending. So our focus is to democratize basically lending. And the reason we want to do that is pretty simple because, financial inclusion is basically like not present in India, right? Like 95% of India doesn't have access to formal credit. And it is because, basically credit is limited to a limited set of companies and 10,000 NBFC licenses in India who are going out and giving credit. We feel like pretty much every company with massive distribution and transactions happening inside it, like a Zomato, Swiggy, Ola, Uber, Amazon, Flipkart, whoever you think of, right? They're going to be basically lenders or distributors or financial services in the future. You can call them neobanks, you can call them whatever you want to, but basically, like, they're all going to be offering all of these services, to their end customers. It will be their, customers who are buying stuff from them, or it may be their merchants, whoever. And it's only when all of these companies end up starting to distribute financial services that's where we'll reach a point of financial inclusion, because obviously the cost of customer acquisition, etc., for them is absolutely zero. So to us, that's the most interesting part, right? And one of the big focus areas for Apollo obviously is to reduce the time that it takes for any company to basically start lending, right? When we started, it used to take us like 2 to 3 weeks. Today we've gone it down to 48 hours. Now the mission is pretty simple: get it down to a matter of like 2 to 3 hours. And companies like Scienzy, M2P, obviously, they're our friends because they help us do exactly that and enable all of these fintechs that we work with to keep reducing the time it takes them to basically get kick started and go live and attack this problem head on.
Thank you. Just before Hitesh, you take over, we'll request Ashwin to bring his thoughts on, and then I'll just quickly introduce you, Hitesh, and then you're on. Ashwin, can you share your thoughts, please?
Yes, good evening to all panelists, and it's a pleasure to be here. So we believe that, just as a background, we are a digital escrow company in the country, and we believe that our endeavor was to actually bring down the time for setting up escrows within minutes as compared to currently also it takes weeks to actually set up. And digitization at every level is actually helping the process of issuance of digital escrows. And I believe personally that India as a country, as whether it is lending, whether it is the other forms of financial services, stock investing, by integrating technology into the process, I mean, there are no limits to how far the business can grow. And we have been doing that for over 6 years now, and we have and today I'll be making another announcement, as part of the on this forum, on this good forum that I am available at, on a new launch. So looking forward to this session, and great to be connected to everybody.
Thank you very much. So, may I quickly introduce Hitesh? Hitesh has been part of the ICICI Bank innovation, but he is no less. He has seen so many companies, many of on this panel also, he has seen them from a very different lens. He looks at in a very detailed manner the capability of the company, helps them to take to the next level. My experience with him has been very, very good over a period of time. So, with that short introduction, Hitesh, over to you. You're on mute, Hitesh.
Thanks,
Hitesh,
Asif.
you're on mute.
Kind
Yeah.
introduction. Good evening, friends. It gives me immense pleasure to be amongst all of you, and we have a very exciting topic, uh, which is leveraging, technology, in enabling the financial services. So, and all the panel members are eminent industry experts. So I'm sure this is going to be exciting. So let me, kickstart this discussion by, posing the, first question to you, Ashwin. Uh, what is the right approach, while leveraging, technology in innovation? So is it kind of that you think about a problem first and then go and scout for relevant technology solution, or it's other way around where you have a particular technology and then you find use cases of those technology, and map it with the, problems which exist, and I would keep it contextual to financial services. So, what is your take on that, Ashwin?
Great question, Hitesh. I believe that technology and evolving customer demands are having actually a dramatic effect on the way today's businesses operate, especially for BFSI. It actually starts with imagining popular financial products and then studying the pain point that users face. Technology is actually nothing else but a wraparound of ease and convenience for users. And today's customers have reduced attention span, as we all know, a limited time for everyone. So they are willing to pay more if the service is good and it's frictionless and seamless in terms of the usage. So we picked up a huge pain point ourselves, of opening the escrow accounts by banks, which takes nearly 8 to 10 weeks on an average, and is completely manually driven, when it comes to documentation. So today we offer technology innovation where we open digital escrow accounts in seconds. So for me, I think it starts with imagining digital financial products and then building newer technology to implement, which is actually fascinating for users.
Yeah. Thanks, Ashwin. Uh, I think, our experience also that it works both ways. I mean, at times you have problem statements which you discuss with your, tech friends, tech entrepreneurs, and they are able to sometimes, figure out a solution for you, and it vice versa also, where you kind of
Absolutely.
in technology and, find appropriate use cases, though it may be used in some other field, but you can always borrow and, see if it can be applied to your own business, right? So with that thought, Rajesh, I have a question for you. That most of the times, banks or financial institutions, they try to innovate, and one of the way to innovate is working with, let's say, startups, partner with startups and fintechs. uh, uh, and at times, there are some ideas which are at, let's say, seed stage, or you don't know the outcome of those ideas. So, what, according to you, what should be the right framework, right, to one, to seed those ideas and commercialize it, and also right approach to partner with startups and fintechs?
Um, I think it's most relevant with the current scenario as we see in this market. To start with, like you rightly said, identify the problem, speak to your tech entrepreneurs, speak to your friends in the technology team, and see how you can solve it internally. Many times, banks or financial services companies have their own talent, and they have decently good talent. They have the right resources, but to be able to generate something which is scalable, to be able to deliver something that can bring value and deliver value, you might and ideally would want to collaborate with fintechs, collaborate with your partners. The best approach, as I see it, is to identify the challenge, define an approach along with the partners, create a sandbox, try it out with a smaller target audience, and see what the immediate outcome is. Post that, work with the regulator or the ecosystem, work with your target audience, create a commercial structure that works very well. In fact, we've seen this, and we work very closely with quite a few digital lenders, and we also work with NBFCs on the back end, like Mikhil mentioned. We do a lot of work with them. Most of our digital lenders started off with solving a problem of access to credit. And when one or two of them were able to crack the model, they're able to understand what is the right approach to risk management, right approach to underwriting. They have scaled it up so well in the last 3 to 4 years, starting with a nominal maybe 10, 12 loans in the first few weeks, going up to a few thousand loans in the current state as we are today on a daily basis. And this is expanded both in terms of number of transactions, number of dispersals, as well as value terms. And how did this happen? And to your question, is because there was a collaboration between the technology play, the ecosystem, and the bank who's ready to support, and they've been able to create something that addresses the genuine problem and create value for all the partners in the ecosystem.
No, I think good points, Rajesh. I think mindset of partnership, and also creating sandbox environment, and couple of other things which we have seen is working with accelerators, incubators, or you also mentioned about creating sandbox environment. So while there is a regulatory sandbox environment available with the regulators, some of the financial institutions have set up their own sandbox environment as well. So taking a cue from that, you know I would say, Arpit, I would pose a question to you that we have seen the digital adoption accelerating in past couple of months, and thanks to COVID, right? Some things which are positive about COVID. We've seen rapid digitization, right? So but that also has posed a lot of risk in terms of cyber security, data privacy. So how, as in, what is your advice or your inputs to the financial institutions, bank and fintechs to address this challenge? How do you guard your digital properties, your consumers, with the from the cyber security concerns?
Yeah, no, Hitesh, I think you're absolutely right. That is emerging one of the key concerns, especially when you're digitizing. I think, and why this concern is that when data volume is flowing in the speed, as Rajesh said, right, 1,000 loans a day, there is absolutely no scope for human intervention. There's absolutely no scope for any human checks. So, which means everything needs to be automated, including InfoSec. One of the challenges for InfoSec, which they have overcome actually, is that it's traditionally been very human driven, and I think very easy way to solve is money and time. I think both of which people don't want to spend, and we have done a lot of these projects with banks, with fintechs. I think a bank will spend a month thinking about how this color should be, but when it comes to a infosec check, they'll say it should happen in 2 weeks. And and that's everywhere, right? Everyone thinks of infosec as this one tick box key, someone else's problem. So I think that needs to change, right? You need to give time to your infosec team to manage it, and they are generally underinvested. And the second is, of course, money, right? We work with so many people. They look at infosec as just as a tick box, right? You will go for the cheapest VAPT test. I mean, it's not even a joke. People don't even discuss as to, should we go for a higher? Is there a better feature, better quality? No, it's very simple decision. If there is needs to be a tick box ISO certificate for a particular build, everyone is kind of in consensus it should be the cheapest. And I think both time and money are two variables. Seems like now, and we will eventually go the Europe and US way in this.
Got it. Yeah, I think it's always better to get your systems processes audited from the infosec angle. uh, do dipstick on a regular basis, right? Some of the stuff which we try to do it on ongoing basis. So I would now go to Nikhil, and this is, I think, a question which keeps coming up very frequently across all the panels and all the discussions, that COVID-19 has had a larger impact across businesses, economies in the world, and BFSI segment as a has also gone through the challenges posed by COVID-19, right? So my question to you is that how one prepares, right? And we are still in the middle of the crisis, I would say. Uh, uh, how do as an financial institution or a bank or a fintech startup, prepare for to kind of leverage, and to kind of see that the COVID impact is minimalized on the business?
I think, firstly, honestly, in my opinion, at least, COVID is just, specifically when it comes to, BFSI as an example, it just pushed everything forward by 5 years, right? Like, it's now basically, I think, anybody who's trying to fight it, right, and trying to continue, doing things the old way is fighting a losing battle. I think step number one is to accept that, now more than ever, you have to do things digitally. Yes, everybody was comfortable doing things, the old way. But if you try to continue doing that, basically it's going to go very badly, because neither customers want to do anything which, doesn't, which basically involves them socially interacting with somebody. Neither do, I'm sure, banks and NBFCs, the employees of those companies want to basically put their health at risk and, do anything physically, right? So I think what every person in the financial services space should take this opportunity as is to really double down on technology, right? So, now is basically a time where, apart from, these are wonderful conferences and, boardrooms, I think now it's actually really time to put, where your money, where your mouth is really, right? And double down on technology, right? And I think, the good news for all, banks and BFCs out there, right? The large ones is that, you guys have the capital, you're, yet on top in many ways, right? I think it's not like the boat has passed you by, right? Like it's really like, we have stories from the past which tells what happens, when boats pass you by. There are so many stories out there, but, it's never too late. It's yet day zero. So I feel like, all of these banks and NBFCs, right? They should in fact take this as a great opportunity to literally double down and just be like, what, we're going to basically become and embrace the technology DNA of our company. If we don't have a technology DNA, then we need to grow one, right? And this means infusion of talent, and this means infusion of talent at a CXO level, right? Because a lot of people always ask me this question, right? How do you become a tech NBFC? How do you become a tech bank? I think it's pretty simple, right? I think number one thing you have to do is hire top level talent right at the CXO level, because then that's when things will move, right? Otherwise, if you just hire people, they may be great team members, but they are finally just, if they're lower or middle level team members, they just can't influence change, right? So you really have to change the DNA of the company, and that has to come from the CXO level.
Can't agree anymore. I think it's all about changing the culture, getting your. Obviously, it can start from the CXO level, but it has to percolate down the last, employee in the organization. Where, how do you, the way people are physically fit, how do you make them digitally fit, right? And digitally fit is more important in the current context. And I think the COVID has helped us to propel some of the initiatives, be it virtual banking, be it digital operations. I think, and this has helped not only reaching out to certain set of customers which were otherwise not able to reach out, but it also helped us in reducing the cost part of it, right? So so building on that point, Rajesh, I think the critical part here is the manpower and the talent, right? I mean, so to imbibe and to embed lot of the digital and tech stuff in your businesses. I think it's sort of all about getting right set of people. uh, so what is your take in terms of one, attracting right talent, and second, managing that talent, because that will become a backbone for all your tech transformation or digital transformation.
Sure. So what we currently do and what we've seen is an industry practice too, is to, like Nikhil rightly said, attract the right talent and get the right people at the CXO level. But more than that, it's about looking for people who have the right attitude, who are able to quickly adapt and learn. Second, to partner with people in the ecosystem. For example, we do a lot of work with RegTech companies like Scienzy with Arpit, where they bring in the innovation, they bring in the people who have done this a few times and continue to collaborate with us to co-create something new. And once we co-create, there are a bunch of kind of people who want to be as a known to be as a part of the pioneers who built this and kind of a pioneering solution that is accepted and run in the world. We've done some exciting work in areas like lending, digital lending. There we worked with teams who have come to us from traditional payment solutions companies. And what do we provide them is a free platform for them to try out a bunch of new initiatives, question their traditional way of thinking, and see how we can reduce time to market. For example, to onboard a customer to be able to issue, let's say, a credit card, if you're lending on a credit card, which used to take earlier between 6 to 7 days, and was probably brought down to 3 4 days by some of the banks. We have now brought it down to 3.5 minutes. And there we rely on a lot of engineering efforts internally, plus a lot of support from partners like Scienzy, where we automate the whole registration process and KYC, etc. So this kind of a change has, like I said earlier, ensured that we're able to service like a quick service restaurant, offer financial services immediately, plus give that excitement or that the juice of creativity to the team who understand payment solutions and who are able to add that layer of building something different, something pioneering, which solves the problem currently. And post that, it's all about giving them new challenges, new kick, and that's how we kind of retrain and retain talent.
Yeah, no, aptly described. I have another, emerging trend to discuss with, Mikhil, you, because, you are into the, you're at the front of the, lending, you're driving, lending business revolution from the, front. So, embedded finance is now, becoming the new trend, and it is converting, almost every business into a fintech, right? I mean, and we are seeing that payroll providers are started providing financing now. E-com companies are providing financing on their platform. So you know what is your take in the businesses to adopt embedded finance, and also banking as a a service model, right?
No, definitely. I think, I think embedded finance, I think honestly is inevitable, right? From my perspective, basically, I think you mentioned HRMS companies, I think e-commerce companies. I think fundamentally, if I had to just give you a simple example, right? I think, what's going to end up happening, and I'll talk about maybe a company which is, on everybody's lips right now, basically Zomato, right? Like, I think, it's inevitable that, anytime soon, if they're not now, they're going to basically start lending to restaurants, right? They basically control the number of orders which come into restaurants. They basically control and understand and have visibility into what are the orders that they're going to be getting in the future. They have basically visibility both on ability to pay and as well as intent to pay, right? And when that happens, essentially, fundamentally being a listed company now more than ever, they need to make sure their revenues are up and to the right. And for that, essentially, they need to supercharge the growth of all of these, I would say top 20% restaurants on their platform, right? So from that perspective, they have no option but to come in and become the growth, supplier, or you want to call them basically providing growth infrastructure to the best providers and best restaurants on their platform, right? Because if they don't, ultimately Zomato's revenue is not going to go up, right? Because it follows the Pareto principle where the best guys are, basically contributing 80% of the revenue. So when this basically happens, right, you can take this example and take it across Flipkart, Amazon, Uber, Ola, whoever really, right? Any company which honestly has transactions going through it, everybody is going to do this, right? Because fundamentally, this is going to be basic table stakes, right? In order for you to do this, like before this, I was the co-founder at PharmEasy, and we literally raised hundreds of millions of dollars. But it was a funny joke at that point in time because our pharmacies at that point in time, right, they were struggling for working capital loans, right? And we had to actually go out to our friends and family and ask for like 10, 20 lakh rupee loans for pharmacies. And all of them looked at us very, very strangely because imagine reading in the newspaper that this, guy has raised $100 million, but he's asking for a 15 lakh rupee loan from me. Imagine the weird stares you get, right? So I think that is a problem which is there for every single platform out there today. And it is going to be solved by, you want to call it embedded lending. I call it inevitable. Like over the next 10 years, every single company which has transactions flowing through it is going to basically start doing some form of lending or the other. And it will not be lending like, lending is done today by banks and NBFCs, like primarily banks and NBFCs, and rightly so. They focus on NIMs, right? But when Zomato, Ola, Uber, Zomato, Amazon, all of these guys get into lending, it will be to supercharge the growth on their platform, right? It will be less about NIMs because they have like, shit ton of supply of, capital at their end, right? So that's point number one, right? When you talk about banking as a service, again, I think honestly, that's a move which most banks and NBFCs should strongly consider. I mean, I am biased because Apollo is literally that, right? Where NBFC is a service in a way, but I think it's a move which is inevitable because ultimately what happens, right? All of these platforms already have access to millions and millions of users, and these users love these platforms, right? They love using an Ola, they love using an Uber, Amazon, Apple, Google. They love using these services, so it's inevitable that they'll want financial services also from them. There are examples out in the world, right, where obviously Goldman has partnered with Apple to create the Apple Card. Google, there are rumors out there that Google is creating, almost like a neobank offering debit cards and all of these things in the US. This is going to continue as a trend. So where does, a bank or an NBFC see themselves, right? It's very important that you recognize where you're going to be like in 20 years from now. And I think what is going to end up happening is you have to really create a world-class stack to become like a really good banking stack, right? From a technology perspective, because table stakes in the next 5 years is going to be that, a Zomato or a Ola or an Uber or an Apple is just going to go to banks and NBFCs and talk to them that, hey, we want to do this. We have the customers, we have all of the data. We just need like a regulated entity which has world-class tech to handle our scale. And are you that person, right? And the answer is no. They'll walk away to another guy. So I think banking as a service is something which, if I was a CXO at any of these large banks, I would definitely put a lot of energy and time into this as an exercise and really create a world-class scalable platform and become the de facto choice. And again, it's almost like I'm wishing a competitor into life by me saying this. But this is what we are doing. I always recommend the same thing to all my banking friends as well. I think you guys should do this definitely.
No, I think embedded finance is all about offering that seamless experience while you are on a particular platform. If the customer is more interested to avail that service, and the finance is not the main thing one is looking for, right? It's a means to achieve an end objective, to do a transaction or to avail some service or some product on the platform on which you are transacting. So yeah, embedded finance does bring in a lot of one seamless experience for the customer. Second, I think very important point you mentioned is about the ability of those platforms to uh, analyze the customers in a different way because of the kind of data they have. You mentioned about Zomato having data about restaurants. I think traditional lenders might not have this data, while Zomato is able to look at this data on a daily basis, right? In terms of how much sales are happening, what kind of sales are happening. So that brings in a lot of richness of data, which is more recent and which is more cash flow, oriented data. So I think those are important pillars, in the embedded finance. So on this point, Arpit, you know how do we, data is uh, important aspect, right? Be it be it, is it a payment data, it's or lending or anything, right? Where and people who own this data, kind of have a better advantage vis-a-vis people.
We lost Hitesh, right?
Hitesh, we can't hear
We
you.
can't hear you.
Am I audible? Hello.
Yeah,
Yeah,
yeah.
yeah,
Hey, sorry, yeah, sorry, guys. So I'm saying that today, account aggregation, it will become a reality soon,
yeah.
and data sharing, will be democratized, and there would be a lot of efficiency in terms of the way we conduct our financial transactions, today. So Arpit, what is your take on account aggregation, changing the entire landscape in the finance industry in the financial services?
Yeah, no, no, absolutely, Hitesh, you're absolutely right. In fact, we see it in two ways. One is very short term, and one is long term. I think short term, it's a more cost optimization or efficiency measure. I think banks are using a set of data. How account aggregators will help it, it will make it cheaper. So you'll, and it will become very simple. The way I think Aadhaar did for KYC, right? I'm not that banks did not do KYC earlier. So a part of it is that banks are going to see better data. They're going to see easier data. So verification, validation, which is also cost in a way of fraud. So in short term, it's efficiency and it is faster approvals cost. But I think in long term, what Nikhil was saying, right, and what Rajesh was also saying is that there are platforms which are producing a lot of data, right? Eventually, OCN will not be just about banks, right? Account aggregator framework was only banks, but OCN will be about the Zomato and will tell Zomato that this data belongs to the restaurant and not you, right? And eventually, the banks will say that when I can be asked to open up my data, why not Amazon open up data on sellers? Why not Zomato open up data? And I think in long term, that will be very beautiful for the entire lending industry because you will not only have banking data, which honestly was there traditionally always, maybe not well structured, but was always there. But you will have these new data sets which are now never there in the system, maybe other than the manufacturer like a Zomato. And I will be able to underwrite a seller not just on bank data, but on some Zomato data. That same seller may also be on an ERP. I will take that data. Then same seller may also be doing something else, like selling some fruits or whatever. I'm just making this up, by the way. But so eventually, you will see that on this seller, other than just transaction data, I have so much data coming from so many different systems, and all are verified. By the way, all come to me on a click of a button or a click of authentication, and that I think will blow up, right? Once we reach that point, and we are right as I think we're the only country in the world which is even attempting to do this, right? So I think hats off to the government, hats off to Samati and all these guys who are behind it. But when we achieve that point, I think it will blow up, right? It will be first of its kind in the world where so much data on businesses, individuals will be available to underwrite over and top of financial data. And I think that will open up new models of underwriting, that will open up new businesses which can be built on top because I have so much data on the individual. And honestly, I'm not a person who has so much vision into lending. But I'm a technologist, I'm an innovator, and the one thing I can clearly see is that there has not been so much data available around businesses or individuals in the past in any country for that matter. And I think that will be beautiful for the entire lending industry in the years to come.
Yeah, I think the other aspect to one is to kind of always look for is that once this new sets of data is available, data is an oil, right? As we all say, new oil. But we also, all of us, need to build refineries to process that oil. and see that we take the relevant data sets and make meaningful a meaningful analysis out of it and use it to offer various products to our consumers. So building on that, Ashwin, uh, uh, while we've been kind of talking about a lot of new technologies, new innovations, but the moot point is that how do we make these innovations affordable and accessible to the large set of masses of customers, right? That would be the key thing while we drive our innovation agenda.
No, absolutely. In fact, to add to what Nikhil and Arpit said regarding data, and of course the power of technology. So just to give you an idea, State Bank of India, it took 10 years for them to grow their home loan book from 89,000 crore to 500,000 crore. And over the next 5 years, they plan to double that up with the usage of technology to 10 lakh crore. So as far as tech is concerned, it is, if it is unaffordable, then it is waste of time and energy. And keeping business costs down, not only while innovating or building, I believe that it is pretty important to also keep every cost in mind, so that the traction or usability increases at some point of time. Just to give you an idea of how not only the technology can be cheaper, affordable for users, but also how the technology can help open other monetization channels. So just for an example, and I found this interesting use case in Kenya, I thought of sharing it with everybody here. So there's a company in Kenya called M-Pesa, a mobile payment solution, right? And this is greatly needed in a country like Africa, because 80% of people don't have a bank account, right? But roughly 82% of people have mobile phones. So what's even more exciting is that M-Pesa has become the source of the business and ideas in other sectors as well. So one of the M-Pesa's founders launched a product called M-Kosa. So M-Kosa actually is a home solar solution in a box. It has rooftop panel, 3 LED light bulbs, solar radio, and cell phone charger. It costs roughly about $200. So how they plan to sell that and make it more affordable is that they went into the market, people who can't afford $200 product. So they said, please sign up for an initial deposit of just $30, and the rest can come as a micro payment of 50 cents a day. And in 365 days, the micro payments, you own that product that can be set up and start receiving clean and free energy for your home forever. So considering innovations, we believe that there has to be newer ways, newer versions of keeping the costs low, allowing people to start using your services. And then obviously the modifications, feedback, you keep on iterating. As founders, we built our business on feedback. It has taken us a lot of time, but feedback is critical, right? Feedback, as they say, is golden. And for us at Escrope, we work with a small team, innovating ideas every day, keeping prices affordable, creating products that are agnostic of industry, size of transaction, bank account that one is using, age of the user, or the ability to use technology. So today from this forum, we are releasing by far our biggest innovation today, and very happy to announce that we are starting issuing digital escrows via WhatsApp from tomorrow. So this is never been done in the past. This is going to be the biggest change as we plan. And again, innovation, even if you make apps, one can kind of delete those apps if it becomes unusable. WhatsApp would always remain. And that is the reason we thought of everybody says democratization. We thought of not making any app forever, but shift the issuance of digital escrows via WhatsApp. So tomorrow, and I'll share the number with you privately, you can, of course, start testing it. It's a beta release tomorrow, but we'll be more than happy to take it forward. So whether it is 390 people million India using WhatsApp, whether it is illiterate person or a scholar or a small business or a large enterprise, everybody uses WhatsApp. And we believe that this kind of penetration is great for our country, because the banks that are backing us at the back are the largest banks. The technology is robust, and people get a chance to explore the product via WhatsApp.
I think many congratulations, Ashwin.
Thank you, Hitesh.
Very well articulated. How do we, good examples, M-Pesa, M-Kosa, and digital escrow through WhatsApp. That how innovations can be made affordable and accessible to masses. So, uh, you know, uh, picking up that thread, I would ask Rajesh. That Rajesh, today we see APIs, right, becoming the way of life, and any partnerships, I would say, the APIs are becoming backbones on the. In fact, the success metrics of the partnerships are now dependent on the quality of APIs and integrations you built in, right? Especially in the especially in the startups, fintech, and the bank. So, what is your take? While your suggestion or recommendation to people who are embarking on this journey, because you are at the front driving the API revolution in so what are your views?
So what we see is that since we are a API platform company and we've been offering APIs to enable banking as a service, to enable financial services as a for all the our fintech customers, we are seeing a lot of adoption. Plus, we are also seeing a lot of simplification. When I say adoption, there are new fintechs who are looking at launching their service, which could be lending, which could be travel and forex, which could be fleet and fastag, and all of these are their traditional businesses, but moving to a electronic medium, working with a bank. And we enable this because we have open APIs, because we have APIs that can make it like a game of Lego. You take pieces of Lego and build a tractor, build a building, and build whatever you want to. Second, what we are seeing is like you say, banking as a service. There is also network as a service today. While most of the generic banking services have converted into an API, and you can draw an API and start using it, you still need to connect to a physical infrastructure for a network like a Visa or a Mastercard, etc.
So, Hitesh, any new innovations from ICICI Bank?
Many more to discuss, but I think that, I can see Arpit and
Nikhil is there.
yeah. Now I think we are getting back. Yeah.
Am I audible, visible?
Hey, sorry guys, I think there was some technical glitch. We are back on the stage now.
Yeah,
So
Rajesh, am I audible, Rajesh?
yeah,
Yes,
yeah,
yes, yes, yes,
you are,
yes.
we can hear
There
you.
was some
So
technical glitch. So no,
yes.
I can, you can continue, Rajesh, on the API,
Yeah, so I was talking about being able to launch these services, the traditional services, using our platform and using the bank's card solution. Outside of this, there are a mix of APIs, and I'll draw an idea from what Advait was saying. The open APIs for OKIN, for account aggregator, and for KYC. Together with that is the banking APIs. And once you merge all of these, is a very powerful solution that you can use for launching new lending products, you can use for assessing whether your potential borrower has got the right background, the right capability, capacity to pay, intent to pay, looking at how, what Michael had said earlier. All of these are the new technology API or the new age APIs that we currently offer, and we're seeing a proliferation of these across all the business units. And you can choose to mix a few pieces of Lego and create something for travel and forex companies, something for a digital lender, something for a HRMS player, something for a player who's doing something very unique. Like we work with one of the milk cooperatives. We work with one of the milk technology company where they're trying to digitize the whole payments flow from the farmer going up to the dairy farm, right? And this has become a reality today only because of availability of APIs and only because of the new age technology that we currently use, offer, and of course collaboration from banks and banks like ICICI and a few others.
So Rajesh, I think we kind of keep hearing about neobanks quite often, right? It's a mainstream word now, across, and we have seen emergence of neobanks on the individual consumer side, on the SME side, right? So uh, the way the neobanks work is, on the back end there is a bank, right? So there is a very tight integration with the bank, and
Yeah.
the front end is managed by the neobank. So, what is your take in terms of how do this, neobank one, reduce their, product launch timelines and integration timelines? And second is that, what is your view, in terms of time frame the neobanks will become more mainstream?
So to answer your first question, I think the timelines for a new bank to launch a neo bank to work with, ideally if they work with partners like us, like Arpit, we can kind of enable all of these solutions to bring banking to the doorstep, to bring other financial services like wealth management, like insured, because we work with insure tech companies, we work with wealth management firms, we work with personal financial services firms, and these are the value adds, and these are the, so to say, the icing on the cake as we see it. And this is our our view. Most neobanks in this region, while they continue to offer banking as a service, and the best part is India is fairly mature in terms of technology adoption for in the banking sector, unlike what you would see in Europe or in US, where they are relatively, if you have to send money, we have IMPS, we have NEFT, we have RTGS, which are like new age, and you can get the money at the other side in a few seconds or in an hour or so, which is not present today in the rest of the world. We work with quite a few countries, banks in the South Asia region, where even a UIDI equivalent or a NSDL or a PAN verification equivalent is not available today. So we are far ahead in terms of technology maturity in banking, and hence I don't think the use case of neobanks and the growth of neobanks will be based on just purely providing banking as a service. Where they would become really successful and scale up quickly by being able to offer those additional pieces like an insurtech, like wealth management, like personal financial services. Let me take an example. We work with one of our partners where we work with offering their insurtech as embedded into our service, where a person, a normal individual who's going abroad with a family of four, he needs to take an insurance for his international travel. This insurtech API offers him an option to choose the best insurer for personal accident because he's traveling internationally, choose the best insurer for baggage insurance, choose the best insurer for loss of critical documents, loss of cash, etc., and choose the best insurer who can also give him a return ticket, so to say. And all of these four could be different insurers, but all of these using an API are bought in small sachets, offered into one single cover note by this insurtech player. And this is something that's embedded into the neobank player who's offering, if you sign up with me, you get a bank account, plus you also get this wow insurance product. You also get a wow personal finance product where we'll help you open an account in a brokerage firm in the US, and you can potentially invest small quantities in a FANG stock. You can invest in the international mutual funds which track the FANG stock. And access to such financial services, access to opening an account like this has become so simple and easy, sitting in your house at your doorstep. and that's because of availability of APIs plus the add-on benefits that the neobanks are bringing in, and hence we see those who offer these kind of additional add-ons over basic banking are the people who potentially grow over the next. If you ask me, it's at least about 4 to 5 years away. Over the next 4 to 5 years, you will see a mushrooming of a good amount of neobanks of these. Those who offer these special services will scale up quickly.
Uh, you know, uh, Thanks, Rajesh. So, with this, Ashil bhai, if we have 5 more minutes, I have two more questions
No, we
for.
have 10 minutes. So we can go for 10 minutes and then after that we'll open for question answers.
Okay, okay. Thank you. So, the other new initiative, which is kind of initiated by regulator, and this is question. This is question for Miguel. You is the new umbrella entity in the retail payments. I think it's an attempt to encourage more private participation in building up the large retail payment ecosystem. So one, what is your wish list from this new umbrella entities getting formed? The couple of applications have been made. The licenses are yet to be awarded, but we can always preempt and put a wish list forward to them in terms of what is it that and here I would request you to wear the hat of a consumer, right? And tell us that what is your wish list from the new umbrella entities which will be licensed by regulator soon.
I think my wish list for most regulators is actually the same. Be very, very generous in handing out licenses, right? Because, like, I think this country basically requires 10x of everything, right? 10x of the number of NBFCs, 10x the number of banks, 10x the number of payment licenses, whatever you want to talk about. And I think I've heard a lot of arguments as to why that's not possible, and how do you kind of regulate everything? I mean, we're a population of 1.2 billion people. I think we can find more people that the regulators can hire to just regulate everything, right? See, as it is, just on a very macro level term, right? I think what happens is, as it is, India, like most countries, right, like innovation is followed by regulation. I mean, I experienced that firsthand at something like Farm Easy. When we started that, literally we were selling drugs online. The minute we used to say that, every regulator in the country used to stare at us, and give us like really, really ugly looks. Similar stuff is happening in the fintech world as well. Like, a lot of people feel like, oh my God, what is happening? How can so many fintech start blending? And what's happening? It's nothing, right? Basically, fundamentally, the goal everywhere is just democratization, right? That was about democratizing cheap, affordable healthcare. This is about, democratizing access to financial services. It needs to be done. I think, so in one simple line, I stick to what I said, right? I think the regulator across the board, we need to come to, we need to have the capability of handing out a lot more licenses. And at the same point in time, when you're handing out a lot more licenses, they need to come up with structures where they can manage so many entities who have so many licenses, right? Maybe that means hiring more people in the regulated entity like RBI, SBI, SEBI, all of these guys, right? Maybe they need more people to manage all of these, all of these entities that are getting these licenses. But ultimately, like, that needs to happen. It can't be like with, again, 3, 4, 5 forms. Maybe it's fine to start with. It's limited forms, maybe just as an experiment. But once they feel like things are working and it's going in the right direction, I think we need like a regulator who really pushes, on the agenda that, listen, if India is going to become like a country which has access to all of these amazing technologies, all of these amazing, financial services, then we need a lot more entities to have these licenses so that we can go out and, really deliver, I would say, proprietary, tailor-made solutions depending on who the customer is, right? If I'm wearing the customer's hat, if I'm like a retailer, I have very different requirements from a payment gateway, right? If I'm a, I'm a shopper, right? I have a very different requirement from the, payment gateway, right? Maybe I'm an e-commerce merchant. I would expect a little bit different stuff from a payment gateway. Allow, niche companies to exist by making, this, don't make this license Raj continue anymore, essentially, right? We need this capability where, the regulator is powerful enough to regulate all of these many licenses that it's handing out. But I think that's the long-term basically solution, which I would really wish for the entire country.
No, I think well said, Mikkel, and I think the uh, more and more in licenses would be given. More such ecosystems will get established. It will only expand the overall digital infrastructure in the country. It will also promote a lot of tailor-made or custom-made solutions for the certain segments, right, which are either to uncatered to. So it will also in a way promote financial inclusion. So yeah. So coming to the last question, and this is to each one of you. In maybe if you all of you can describe in Ashwin, I think already described about his exciting innovation which he is
Yes.
rolling out. Maybe and all of you, if you can tell us what exciting stuff you are kind of working upon and plan to roll out, let's say in next 12 months, 6 to 12 months, and what is what is keeping you excited, right? So maybe two lines from each one of you would be helpful. Maybe we can start with Mikil and then Rajesh and then Arpit and Ashwin will go last for you.
Sure.
Yeah.
Sure. So, for me, I think the most exciting bit always remains the key KPI for us, right? Which is basically how quickly can we basically take a fintech live to do their very first loan on our platform, right? When we started, it used to take like 2 weeks. Today it's 48 hours. Like the biggest mission for us is now to convert that into 2 hours, right? If we can make that happen, in the next say 12 to 18 months, I'll be a very happy man. Everything else, will magically take care of itself. But this is like the most important thing.
Brilliant. So, drawing a leaf from you, Nikhil, we are working on two-pronged approach. One is exactly like you said, reduce the time to market. We're working with the networks to see if we can get pre-issued bins, which are certified and ready on our platform, so that we can take our programs live in less than 2.5 weeks. And that's one. And second is we are also known for uptime, agility, etc. So we are doing a bunch of initiatives around edge computing and cloud. We're looking at moving networks and our pieces into the cloud. So to start with, we've started the ACS, which is a key component, and we have kind of moved it to the cloud and enhanced see how we can enhance it in case of let's say $1 billion sale, right? The sale in Flipkart and Amazon. We call it billion a day, the bad project, where we had targeted to do about 10,000 TPS, and with our engineering efforts, we have brought it up to 41,000 TPS. We are now trying to do something similar, working with the networks and offer network as a service. And you don't need a box like a physical rack to connect to a Mastercard or Visa. It's currently in the works, but it's something that we're quite excited about.
Yeah. Yeah, Arpit.
Yeah, hi. So I think our exciting project is today we build onboarding journeys, and it's kind of we need to do it while we can do it. So we are a no-code platform. So I think what we want to achieve is allow the bank's non-IT teams to build end-to-end journeys, right, from app to back office. So I mean, a digital team in a bank thinks of an idea that we want to digitize our housing loans. Like they don't need to come to us. We give them a platform like WordPress, and you just go there, put your journeys together, and in a day, by end of the day, you have an end-to-end onboarding journey ready. So I think next 12 months we want to achieve that. We're already doing it internally this way, but we want our customers to experience this platform themselves without even needing to come to us at all.
Yep. And now over to you, Ashwin.
Well, we have a product called Invoice to Cash, which is dynamic invoice discounting, and we've added a layer of escrow in it. And looking at the response, the phenomenal response that we have, and the ROI that the clients are getting by paying supplier invoices early, is phenomenal. And we plan to add ML, AI, and we strongly believe that the digital innovation is the future. And more we make it frictionless for users, more new markets would open, for a country like us. And we continue to innovate for helping our clients. Thank you.
Oh, Thanks. I think this was very exciting discussion, and I have many takeaways and learnings, and I am sure all the participants also would have found it very enriching discussion. Uh, I would like to thank all the panel members for their sharing their views, knowledge, and wisdom. And uh, I think with that I will conclude the panel discussion. We can open up, for we are open for now Q&A. And thank you once again.
Thanks, Hitesh. Anybody who has any questions can put in the chat box. And in case we have next 5 minutes available to do the Q&A, and after that, we'll request Pinky Mehta to come and propose a vote of thanks. Hitesh, if you are able to see any questions in the chat box on your side, if you can, there's a one icon on the top called chat. If you click
Not
that,
yet.
well,
Yeah, not yet.
no problems. I think in this session itself was so good that most of the questions have been very elegantly answered. The people have been able to articulate it so well. It has allowed the audience to digest all the answers which has been given by this August panel. I'm really grateful for all of you participating here on the panel, as well as all who have attended. It seems that we don't have any questions coming on. So we can go back to the stage on the backstage. If you can take us to the backstage, please.
Thank you. Thanks, everyone.
Thank
Thanks,
you.
guys.
Thank you.
Thank you.
Bye.
Thank you. Thank you, everyone.
Yes, Sandeep.
Thank you. Actually, there are questions. If you go to the chat and go to the Q&A, there are some questions there.
I think we are unable to look at it. That's the problem. So I think there's a technical glitch. So
No,
we will
no
take it
issue.
up. We'll take it
What
up
we'll
separately.
Sure, we'll take it up separately, and what we'll do is that we will have send it to our panelists, have them answer and send back to the people who have asked these questions. Uh, so we're still waiting for Anjali. She's unable to join. I think she will do this tomorrow.
Anjali, Pinky, right?
Sorry, Pinky. And I think we have a two-day session, so Pinky is
Okay.
unable to join right now. So Pinky will join us
Okay,
tomorrow.
then I will propose the vote of thanks
Yeah,
on behalf
please
of
go ahead.
the chamber. I would like to thank our all the participants. I would like to thank all the panelists. I would like to thank the Bombay Chamber and the team who has been diligently working on this to create this conclave. And would like to thank all the sponsors, Kotak Mahindra, Tata Investments, Cosmic Mandala 15, and NICHEM for their wholehearted support, for making this a successful day one offering by Bombay Chamber of Commerce and Industries. This conclave has given us a lot of thought. The first panel, led by Anjali and Nilesh Shah, gave us an idea about how the banking is moving and how it is bringing the digitization and the traditional banking together to make it happen and to go to the next level. And the next panel, which was led by Hitesh from ICICI Bank with the four panelists, gave us the idea that how they are powering the digitization and frictionless and delightful customer experience, which has been getting built at the back end very smartly, very nicely, but not coming in the front like how the banks are today. On various services, the banks, NBFCs, insurance companies are riding, which has given us a lot of key takeaways that how the transformation in this country, which is happening, though silently but robustly, is going to change our lives on a day-to-day basis. With that, I would like to thank all of you and would look forward to see you all tomorrow again for the next day of the panel. Thank you very much.
Thank you, Ashit. Thank you for filling in and for the vote of thanks. See you tomorrow.
Bye.
Bye-bye.